Central Park. We're in the studio here with on the TV show Williams, who is the founder and CEO of Kretsu Form, and
bleach blonde guy.
The bleach blonde guy. That is. Welcome, you're listening to the Best of Investing on News Talk 910, always relevant and sometimes irreverent. We here present the valuable information about real estate, the financial markets, and other economic business of the day for those of you listening for the first time. Imagine a few guys sitting around a bar having drinks without the drinks, darn it, talking business with you, the audience, listening in. I'm your host, Edward Brown, and I'm honored to have as my co-host Mark Hanf of Pacific Private Money, California's premier private lender. You're also a lender, aren't you?
Yeah, easy for you to say.
Yeah, it is. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco, and the vacations are free. Their only request is a $75 cleaning fee to cover housekeeping expenses. That's a deal. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. Today's trivia theme is the old Addams Family. Remember that?
Of course,
okay.
I saw all those.
I was more of a Munsters fan, but that's okay. And our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And don't forget, World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of a wrapper bowl if you mention the Best of Investing. Go there for lunch today. Best wraps in town. And don't forget to mention the Best of Investing for your free smoothie. And today's special guest is Robert Schiff, who is a mortgage broker and has been since 1994. Prior to becoming a mortgage broker, Robert was a real estate agent, and he has over 30 years of experience buying, remodeling, and selling houses. And before we actually get into saying hello to you, I wanted to come up with this interesting fact here that the cruise ship disaster that just happened, how much do you think it's going to cost the cruise industry? Take a guess.
Oh, in terms of notoriety, huh?
Yeah, I mean, you know, with the pictures that everyone's seen of the ship, like half.
That
half,
is
I don't
a
think
great picture.
Isn't that a great picture? I would
Scary,
suggest that they put that on their brochures.
I don't think they
so.
accept that.
They wouldn't accept that. Okay,
advice, no.
Take a guess as to how much you think it's going to cost. Though.
I would guess
probably the millions.
Hundreds of millions.
Exactly.
Really?
Do you remember a few years ago with Tiger Woods and the old infidelity thing? Mm-hmm. They figured that cost golf $1 billion.
You don't say.
Yeah,
that's amazing.
I wonder if someone's going to sue Tiger on that, but I guess you can't kind of do that sort of thing. So
he wasn't on that cruise, now was he?
No, not that I know of. Okay, Robert Schiff. We've got a lot of great questions for you, and I think Mark.
Great real estate.
Actually, I've got the first one here.
You do.
Okay, how can I determine if I am eligible to refinance my house? With my house being worth less than it was several years ago.
That's
a really good question, and it really is pertinent to so many people. Basically, anybody that either bought their house, I'd say, in the last 5 years, or refinanced it within the last 5 years and got a large chunk of their equity out, is now facing, even in the Bay Area, probably being, it's called upside down, where they possibly owe more than the current value of the house. And conventional lending hasn't allowed borrowers to get those loans, but there are some government programs that there's been a lot of hoopla about that would allow a bunch of those people to refinance and potentially lower their payments, so they would be more likely to stay in the house.
Okay, well, you kind of jumped ahead on one of those questions, but that's okay.
Well, that's actually we keep seeing those in the newspapers almost on a regular basis. They keep talking about these proposed government programs. Is there anything actually been approved that's going to be enacted that might help people that are underwater?
Well, the programs that are coming online now are the second generation, so there's already been one generation of programs available.
Did it actually work, though? I didn't
I
hear
heard
that anybody
exactly.
Compared to the projections, they made it sound like it was going to take care of millions of people.
Right.
And the fine lines, when you got down to it, there were little stipulations and footnotes that said, well, you had to have not gotten a loan after a certain date in 2009, or mean, I've unofficially helped people try to get through these programs, and the lenders don't seem to really want to help people in the programs. That's been my experience.
Did they not get anything out of it?
People in the industry are talking, and they can't figure out why. For instance, I have a client of mine who I'm just trying to help, and they own a house in Fairfield. They owe $300,000 on it.
Okay.
The house is worth about $175,000.
Okay, so they're upside down.
They're upside down, and
significantly.
they've stopped their payments. And I'm trying to work with them, with the bank, to modify. And I'm telling the bank, these people don't want to leave the house. They're willing to pay. Why don't you lower the interest rate from 6% to something more reasonable, like it is now, 4%, and maybe lower the loan to $250,000? Then you'll have a performing loan that's more than the value of the house. And if you don't, the people will stop paying. You'll foreclose on them at a great expense to yourself. You have to list it for sale. At that time,
Yeah, but Robert, you're talking logic.
Yeah,
They're talking
that makes
logic to a
perfect
bank.
sense.
but it's bankers, and there must be some way that we're not aware of that when they foreclose, they get reimbursed by some part of the federal government.
They must, because I remember back in 2008 when this whole thing was starting to unfold, we had people who were, maybe they were immigrants, they were legal immigrants, and they'd have maybe two families who owned the house together, and they wanted to stay in the house. But when interest rates had gone up, it made it cost prohibitive. And even though they were upside down, they said, listen, we still want to pay our mortgage payment, but we just can't pay what the new payment is. I mean, it gets kind of ridiculous.
Well, and this has
They're
been
not
the
thinking.
problem, for the last couple of years, is that the complaints that the Obama administration has put forth these loan modification programs and supposedly provided incentives to banks to work with borrowers, but anecdotally, and Robert, here's just another example. I'm just not hearing a lot of success, and it's amazing because your example makes perfect sense. If they take that property back, they're not even going to get the $175 that it's
That's
worth,
right.
because after the holding costs and the legal and et cetera, they'll be lucky to put $100,000 in their pocket.
Well, especially when people find out it's bank owned.
Sure.
Automatically they'll reduce it. So what did you get successful on that, or is that still being work in progress?
It's still a work in progress.
Yeah, well, it takes a long time to go
I've
through the
been
channels.
successful with one client, and unfortunately, after the modification program went through and they were starting, he died. So that's been my record. It
That
hasn't
was a little
happened.
inconvenient. I wonder if that was
Yes.
the cause of it. It could be in many cases.
So Robert, we've got these super low interest rates, and how is refi activity? Is it? I know it was quite busy a year ago. I know a number of agents like yourself in the market who were doing gangbusters there for a while. I mean, how's the activity now that we're going into 2012?
Well, right now the rates are maybe not this minute, but within the past week or so, they're lower than they've ever been.
Right, they're in the threes now. Is that correct?
They're in the threes. It's even there's some 10-year loans that are under 3%. Some
we hear
government
those.
programs.
We hear those
Wow.
radio ads.
2 yeah, and they're real loans.
Are any points on that?
No, everything
Wow.
that they quote pretty much is without points.
Is there much volume on that, though? I guess that was my question. Is that are there many people who are qualifying for those? Especially, if you've got a
Good question.
significant percentage of the population that's underwater, and then you've got the other issue. Do I qualify? Do you have a high FICO score? Can you
Well, what's the
verify your
LTV?
income? What's
Right.
the loan to value? I mean,
Yeah.
how much of that activity is actually happening?
The loan procedure is very medical now. They really look at everything.
Wait, no more
every piece of
115% loan to value loans?
No,
Oh.
someone called me the other day and said, I'd like to refinance, and I said, what's your job? He said, I'm unemployed, and I asked if he still had a TV and watched the news at all, because I mean, it's amazing to me.
There's
that
no more
some
stated
people
income
get-
loans, as I
There
understand. Is that correct?
actually are a few that are stated. Someone
really?
just told me a local bank in Marin is doing seconds that are stated income, but
On a second?
on a second.
What are the rates?
mortgage, just prime plus 1 or 2. So
Whoa, what kind of LTV?
they'll go up to 75%. So,
Yeah, but it doesn't
there
matter
may
how big the
be, there
first
may
is?
be catches once you get into it that you have to deposit a large, become a client of the bank for all your other resources. I'm not sure of the particulars.
Yeah, if you need a $100,000 loan, you have to deposit $125,000 in a CD.
Yes, I don't think it's that bad.
No, it's not that bad. I'm
But
just
generally, no, that the stipulations for getting a loan are much harder than they've been. It's a reaction to the just fog the mirror and get a loan that we all went through, and
Sure.
it's sort
That's what
of
we used
where
to
we
say,
are
fog the
now.
mirror.
But, as someone said to me a couple months ago, if you look back in the 60s and the 70s, especially the 60s, your choice was to go to a bank and get a 30-year fixed loan, and it was 2 points plus $250, and you had to show your taxes and qualify. And so that's the way it had been for decades, and we tend to forget that that was the basis of real estate
but
financing.
then people got, I don't want to say smart, but I guess opportunistic, and said, well, if I can package a whole bunch of these loans together and sell them on the secondary market and blah, 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 blah. Okay, we are going to go to our first commercial break, and remember the theme is the old TV show, The Addams Family. What is the name of the hand that helps everyone around the house? Remember, the theme is the Addams Family. The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Check them out. The weather's going to start getting good here in a couple of months. You're going to want to visit them. Call 888-912-1190. That's 888-912-1190 to answer this question. What is the name of the hand that helps everyone around the house on the Addams Family? 888-912-1190. Make sure you include your name, address, email address, and phone number, and speak slowly and spell it out, please, when you call. And we will be right back. Here's segment number 1.
Was that
Yeah.
Addams Family or
Yes.
the Munsters?
No,
That was
Family.
Adams.
I like that. Do that. Do that.
How do
I like
you,
that. First I ask the question.
How do
And
you decide the questions and find the answers?
He's just has to get creative.
Secret. the next
The secret sauce.
The next trivia question is going to be. Next trivia question is going to. Oh yeah, headsets off. Yeah, because this is. It's,
All right.
next trivia question is going to be, what's my favorite color? Green. I mean blue.
Are you finding people are choosing different amortizations?
No, I mean everybody at our office really sees the incredible benefits of doing a 15-year loan. The savings are phenomenal.
Yeah, they sure are.
When it comes down to it, a lot of people don't want to commit to that extra, $500, $700, $900 a month. If you're in a situation where that's meaningless differential to you, that's great to do. But
Guys I hear all the time say, don't pay off your home mortgage or keep a home mortgage, or don't refinance for the purpose of paying it off early if you have other opportunities to make more money. So it's an interesting exercise,
and you see both sides of it. I've had people, go into a 15-year and then several years down said, "Gee, I'm losing my tax benefits here."
well, that's just it.
And you're either going to have the goal is to either have your house on free and clear, and you don't get the tax deduction. However long into the future we still have that, which I think will be a long.
Makeup, please. Thank you. Now, the thing is, when you did that, though, the camera saw you, not me. You had to come to the side. Go ahead.
Yeah.
Go ahead.
Makeup, please.
Makeup, please.
Kiss and makeup.
Kiss and makeup. There you go. That's it. Okay. A comedy show, I tell you. Everybody's a comedian. I get no respect.
All right.
Okay. Okay, so you remember your Munsters
Yes.
or Lurch thing. Okay. All right. Good show so far. We'll continue on with the questions when we get back after. Wait, do you, I loved you. Hold on. You bubble-headed booby. From
You
Lawson's,
bubble-headed booby.
love that from Lawson's
Lawson's
Space.
Space.
Remember that? See, we're the same age, so we grew up at the same commercial.
Dr. Smith.
Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host, Mark Hahn of Pacific Private Money. When we cut to the first commercial break, we asked this first trivia question. And remember, the theme is the old TV show, The Addams Family. What was the name of the hand that helps everyone around the house? Mark.
Well, of course I remember Lurch.
That's very good.
That'd be the thing.
That thing, that is correct.
And, my goodness.
My
Yeah.
goodness. We are in the studio with Robert Schiff, who is a mortgage broker. And there is another question. I think I'll ask this one. How much do you have to have for a down payment nowadays?
Well, as you do still have to have something for a down payment. There's no longer 100% financing, but
Darn.
FHA program, you can get a loan with as little as 3.5% down payment.
That's still pretty close
That's
to
still
nothing.
yeah.
Yeah.
So is that still pretty common right now? How common are these FHA loans?
Well, they're not as common as they should be because I'm not sure, some of the realtors and some of the clients have an idea from the past that when you got an FHA loan, everything in the house had to be fixed, everything had to be perfect, and there were a lot of impediments to getting the loan, which is not true at all now.
Really?
So how come people aren't just jumping off the shelf?
Well, they're slowly starting to realize it. I'm involved in a purchase deal right now, and the clients are getting a 4% credit from the seller, which is going to pay all their closing costs, all the FHA, all the mortgage insurance costs, all their, basically they are putting 3.5% down and getting a loan that's slightly better than a conventional 30-year fix.
Wait a minute, isn't that, are they effectively getting a no money down then?
They're putting 3.5% down.
Yeah, but then if they're getting a 4% credit,
With the mortgage insurance costs and the closing costs where they have to start an impound account for their taxes and insurance and pay 1 month's mortgage payment and pay all the closing costs, that amounts to about 3.5%, and the extra is going towards part of their first payment.
So let's talk about qualification then for an FHA loan. So there's still opportunities to buy with little down, which is great news for people who may have thought, now you have to have 20% down, which in the Bay Area is an awful lot of money, even in the lower price neighborhoods. So what are some of the qualifications? So, like, for example, if I have a foreclosure on my record, how long do I have to go after that before I would qualify for an FHA loan?
That's a really great question. If you have a foreclosure, or if you had a property that was deeded back to the bank, or even a short sale has an adverse effect on your credit report. And if you're going to get a conventional loan, you would have to wait 4 years before you could go ahead and get another conventional
wait, are all
loan.
short sales reported to the credit agencies?
As far as I know, they are.
Okay, I mean, if for some reason the bank doesn't report it.
The bank has an option of reporting it to the IRS for giving clients a 1099, in which case they would be liable for the extra relief of debt. But that's different than, it's going to show on their credit report, and if it's a short sale, the clearing of that from their credit report will probably show that it was a short sale.
Okay, this is for another show, but there are circumstances when you don't have to report the relief of debt in certain circumstances. But that we'll save that
Okay.
for a tax attorney.
But
So you
back to the FHA loans, the qualifications are a little less stringent than they are for the conventional Fannie and Freddie loans. It's really amazing. You can get a 30-year fixed loan on an FHA program at under 4%.
But that's going to be within the conforming rates, though, probably.
No, it's
Really?
including
Jumbo
the
too?
jumbo rates.
Holy smokes.
They were at a higher rate, and they've closed it back down to 6.25 in the Bay Area. But the FHA rates are about to go up to the previous higher rate.
Okay, so 3% down.
3.5%.
3.5% down, and what would the rate be?
It's somewhere under 4%. It could be
Even for the jumbo?
even if it's over 400,000, up to 625.
So you were going to say on the FHA loans, what's how long between a foreclosure before you can qualify? for that?
I'm sorry. For an FHA loan, it's just 2 years.
2 years. Okay, well that's important because there's an awful lot of people out there, and many that I know personally who are renting now because they're no longer in the home they used to own, and it's either a short sale or foreclosure. And so we're looking ahead and we're going, wow. I mean, this is a great time to buy a house. I mean, 2012. I think my personal belief is that we're kind of bouncing along the bottom, and I don't know that prices are going to get any better than they are now, and I don't know that interest rates are going to go any lower than they are now. So, a lot of people are looking at, how can I get back into the housing market? And so 2 years, that's actually fabulous.
That's pretty fast.
For a lot of people, they're probably at the 2-year level.
Yeah, that's
Absolutely.
right.
Got in at the height.
Well, you know what? That 3%, 3.5%. I can't remember the other half. 3.5% down. Doesn't that kind of, for someone who is looking at this going, isn't that kind of how we got into this mess to begin with? Is people putting very little down because they have not that much skin in the game?
There is some skin in the game, and they have to pay mortgage insurance. But it's a hard. Which way do you go? I mean, I don't know how much the government is directing this, but should the government go ahead and try to have these kind of programs? And it's not a new program, the FHA loan.
No.
And at least it takes people who are now renting, as Mark said, and looking to try to get back in the market. And if you could have people become homeowners again, it would help the market recover faster.
Absolutely.
But, you know, certainly if there's no skin in the game or not significant skin in the game, some of those loans in the future might be defaulted again.
Right,
So
and those-
it is trying to find an equilibrium between that is difficult.
Well, it is, and when you think back to the subprime days where people were doing 80-20, I mean,
Yeah.
there wasn't necessarily that mortgage insurance covering the default anyway, was there?
No, there wasn't any insurance of
Well,
any
no,
kind.
if you had an
And-
80% loan, they made you get mortgage, in the old days, they made you get mortgage
Oh,
insurance.
in the old days, but I think
Yeah.
Mark's talking about in the heydays where everything went, you know, there was some people I knew that didn't have any clients that were putting anything down. Everybody was getting 100% financing.
Yeah, because real estate always goes up, remember?
And yeah, and if it didn't, what did they have to lose?
Exactly.
So,
So just for the audience's benefit, you said something earlier, and I caught that. You talked about conventional loans versus FHA, and you said conventional loans, Fannie Freddie versus an FHA. Can you just tell us what's the distinction between, and why do they use the term conventional versus FHA? Is it just the way the industry names it, or I'm kind of curious?
Conventional loans are, at least in my understanding, are loans that are either done by, say, RPM Mortgage is a mortgage bank, and we will go ahead and do a loan, fund the loan, and if it's a conventional loan, we're going to basically sell it either to Fannie Mae or Freddie Mac, or sell it to a mortgage bank that's going to, in turn, sell it to Fannie Mae and Freddie Mac. The repository for conventional loans is basically the government, in not 100%, but close to 100% of the time. Alternately, but those are the stipulations that say now you have to have 20% down, and you have to be able to qualify, and your credit has to be a certain. The stipulations are much harder than they used to be.
And why would anybody go for a conventional loan, and why wouldn't they just go straight for an FHA? And is that what's happening?
With an FHA loan, if it's a 30-year loan, no matter how much you're putting down, you have to have mortgage insurance, and that's
Okay.
an additional
How much, yeah,
cost.
how much is that?
Well, it's an upfront fee of about more or less 1% of the loan, and then it's a monthly
like a-
fee that could
like a
be
point.
$200 to $400. Yes, a point,
Yeah.
$200 to $400, and if you factor that in,
Yeah.
then the loan is not better than a conventional loan.
Interesting.
Now, a caveat to that is if you're going to get an FHA loan, it's a 15-year loan, and you can eventually get your loan down to 78% of the value of the property. You no longer have to pay mortgage insurance.
Okay. Now, Robert, you obviously sound like you know what you're doing. That's why we had you on the show. Why, just give yourself a little plug here, why should people give you a call, for you specifically? Like, what can you do for people that other people can't, or other banks? And then give out your information.
Oh, thank you. I've been in Marin for 30 years. I started out buying real estate myself and remodeling it and fixing it. Friends said, gee, can you help me? And I became a realtor and got involved in that side of the business. And my degree, it was in mathematics, so I had a predilection for helping people fill out their loan applications. And during a real estate slump in the early 90s, I decided to become a mortgage broker, and found that much more to my liking. And I've been doing it since then. I understand the way realtors are looking at a deal. I understand how clients are looking at a deal since I've been a client myself.
So you can think outside the box.
Really, yes, thank
Okay.
you.
Because that's important. I mean, we're not talking about fraudulent stuff. We're just talking about just being able to help people if they have intricate situations.
Be able to listen and you know, pull out from the clients what their real aims and goals are. Sometimes, especially if they're new to it, that's a time that they're really nervous, and it's helpful for them to have somebody listen and
Okay.
clarify things.
Give us your phone number and your website in case people want to get a hold of
The
you.
website is RPM Mortgage, and my phone number is 415-515-1941.
And I'm guessing you can work fast because RPM stands for revolutions per minute. right?
It's residential Pacific Mortgage.
Oh, that's
but
close
yes,
enough.
we can do a deal in 15 days if
Okay.
we push it.
Oh,
Thank
that's
you.
pretty good. Okay, we are going to cut to the second commercial break. We've been in the studio with Robert Schiff, who is a mortgage broker. Stick around because you're going to have fun with us, all right?
Thank you. I'm
Because when
enjoying
we
it.
get back, not only are we going to go into email time, but we're also going to talk about a judge fixing tickets in Orange County and a little bit about the stock market, what's going on with that. Here is the second trivia question. Remember, the theme is the Addams Family. Okay. What are the two children's names? Remember, the theme is the Addams Family, and it's not Lurch. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website, lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. On the Addams Family, what were the name of the two children? Call 888-912-1190 and make sure when you call that number you include your name, your address, your email address, and your phone number. And remember to speak slowly and spell it out for us, please. And we'll be right back.
Hats off. All
You know
right.
their names too, huh?
Huh?
You know the kids' names.
Pugsley is one, and so I don't. So we have our prop here.
We do have our prop.
Yes,
Or-
indeed.
because remember, we're a bunch of guys sitting around the bar having drinks.
Having drinks
without the drink.
So I think I'm going to have to bring something to fill this up with next time.
Definitely.
It is after all the weekend, and we should be able to imbibe. It might make the show a little bit more interesting after all. I know I'm more interesting after.
Just get a few drinks in me, right?
Yeah, right, exactly. Well, that's really interesting. It's because
Can you imagine the size of the umbrella you'd have to put on?
Yeah.
Well,
Exactly.
I was in Boston, and there was this club we went to, and I swear they had glasses just like these, and it had some kind of
We're gonna go for
fruity
bourbon in just a
type of
minute.
bluish drink thing with two straws, and so we had to try it. All I know is it had a rum in it. I don't know what else
Oh,
it had in there. But after my wife and I finished that, we were pretty happy there. We were glad we weren't driving. We were cabbing everywhere. But I just, that thing about the whole conventional versus FHA, that's always thrown me. I mean, even though I'm in the hard money lending, I'm not doing that side. I don't come from that industry of
Your
loan
dad-
origination.
Your dad had that business too.
Yeah. Well, no. My dad was a developer.
Oh, okay.
So for my first 25 years and my first 20 years in the business was working for development. So I don't come from mortgage loan origination as a background. So I when I hear conventional and then I hear Fannie Freddie and then I hear FHA, I know if I'm confused and I don't really kind of know exactly or confuse one or the other, I know that the audience does and oftentimes will. I think there's a lot of confusion and misunderstanding right now as to what's happening really in mortgage origination, because I don't think a lot of people know that it's actually easier to get 96.5% financing
Yeah.
today 2 years after foreclosure than it would be to get a
Yes.
so-called conventional
Well, no,
bank loan at
everybody
8%.
It's not-
everybody
it's not
hears
that
that
it's
it's
easy, it's
hard to get
possible.
loans.
Yeah,
Suddenly possible.
right, suddenly
Yes.
possible, yeah.
But it still is difficult because, if you don't have if you're self-employed, you don't have a 2-year history,
Yeah.
or if you're in between jobs.
Because
you
these are
still-
full docs.
That's all there
Yeah.
is. Yeah, that's
Yeah.
all there is.
Yeah.
louder, Robert.
It's all there is are full docs anymore, and
Yeah.
they really, they get to the point that if you have to give them a bank statement, if there's deposits on there and the deposit is more than, and it's at their whim, they can say you have a deposit of more than $100. Every single one of
Tell
them,
us
you have to
where it
verify
is,
where it
yeah.
came from. And so the clients get really upset
Sure.
sometimes because they feel, and many times are true, they are eminently qualified, make good money, have great credit, but they still have to go through that. And if, I had one client and they said, I lent this guy money and he paid me back. Well, what did you lend him money for? I lent him money because we bought a shed out back for feed and things for the horses. Well, we want to see proof of that.
Yeah, well, let me see
On
the
and
promissory note.
Yeah.
So this one, let's see, this one I got from embezzlement, and this one gambling winnings,
That's-
and
yeah.
this one I cheated this guy out of some money. And
That was another client that called.
That was a different one.
That's another story.
Well, Robert, you and I will have to talk soon because, my wife and I, my family is presently renting, and we are, looking at getting back in the market soon, whether we do it this year or next year. And a lot of it has to do with my particular business. I do now finally have two actually now close to 3 strong years of financials for Pacific Private Money. So we've been kind of, I knew that I would have to season my new practice, my new company for a while before I would probably qualify. But it's worth a conversation because maybe I'll find out that, well, okay, it's going to be 2013 for these reasons, or maybe there's an opportunity this year because we've been running now for going on our
afterward.
third year. I have to double check.
Well, they're
the best. You're the best.
I've gotten a loan from a guy who was inherited money from his family
Yeah.
and invested it. I
best
don't
of
think with
video.
you, with
That's it.
I forget his name, but and some other investments, and he inherited in September,
Yeah.
and he didn't get his first.
Typically, typical insurance company, probably not. But the thing is, for the right price, you can get insurance. I don't care if you're 10 minutes away from dying.
Yes.
Right? Yeah, you just pay 99% of the premium. And sure, we'll get you insurance. Just last another 10 minutes.
Absolutely.
All right, you guys ready?
Yeah.
Don't forget, I got to get the 5 seconds before and after. Get so excited.
So we're going to go into email time, or do you want to talk about my the event I went to last night? And we can talk about,
I do. I'm gonna.
Or maybe actually just maybe I could ask. Maybe I could ask Robert. Let's just talk about Robert. Where do you see real estate prices and interest rates heading for
Okay, that'll
2012?
feed right
Because,
into-
it's still January. It's prediction month. We're into predictions.
I just want to bring up this one part about the judge thing because I thought that was kind of
Sure.
funny. I did say something about the stock market, so
Right, and we've got 2 more segments, so
Yeah.
unless I miscounted.
yeah, no, you did not miscount. Okay,
All right.
you guys ready?
Yeah.
All right. Close.
Okay. See, I can't hear it.
I know Robert's going to go. What is that clicking sound? When he does? All right. Okay.
Oh, it's no longer. Yeah.
Okay. Here we go. Let's go for our 5 seconds.
Blocking our star.
Yes. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hanf of Pacific Private Money. When we cut to the second commercial break, we asked this trivia question. On the Addams Family, what were the names of the 2 children? Guys?
I only came up with one, Pugsley.
And what day of the week is this not?
Wednesday.
Wednesday.
That's right.
That is correct. All right. And I wanted to bring up this one little thing here I thought that was kind of funny. It was in last week's paper. Orange County judge removed for fixing tickets. I don't know if you heard this, but a judge was ordered removed from the bench for fixing traffic tickets for family and friends. I mean, okay, that's probably
Never
pretty typical.
happens.
Never happens, right? So here, this is the thing I thought was funny. He admitted giving preferential treatment and apologized, but he denied any malicious intent. He told the commission he didn't, this is the best part, he told the commission he didn't realize his actions were wrong at the time.
Oh my God.
Really?
Ignorance of the law is always excusable.
Well,
Any
exactly.
judge
Well,
knows
how is that
that.
different from the fact that I've had friends whose family members are, CHP, and whenever they get pulled over, they automatically get waved off. It's like, oh, my brother so and so, and okay, thank you very much, and they walk away.
Yeah.
So it's like a get out of
Get
jail free
free.
card,
Well,
and everyone knows it. It happens every day.
But at least in that, there's no paperwork to trace.
That's true.
Once there's
Yeah.
a ticket.
Yeah, but
Yeah.
see here, I mean, what I would tell this judge is, you know what, you should be removed from the bench because you don't know the difference between right and wrong.
Yes.
Right? Okay, one other quick thing here. Actually, no, I'll bring that up later. Okay, Mark, let's go into email time.
Okay.
All right, and then you had one last question for Robert, okay?
Oh, yeah, sure.
All right. I understand I get my money back when the borrower pays off. How long will my funds sit idle until it is lent out to another borrower? Now, I understand that question, what that means, but our listening audience may not even understand
Right, we
that.
need to give the setup for
You
it.
got to give the setup.
Okay. Well, I'm president of a company called Pacific Private Money, based in Nevada. We are a private money real estate lender, and so we make loans to real estate investors, and those loans are funded by private individuals. We have about 200 and growing private individuals who have invested at least once with us, and a couple of dozen people that are regular investors in our real estate secured notes. So the question the caller is asking is, it's a question that basically says, if I invest in one of your short-term notes, and our notes tend to be short-term, 6, 12, 24, 36 months, if I invest in one of those notes and then the borrower pays me back, how fast before I might be able to get into another investment. And that actually, and I don't know that the emailer even realized when they were asking that question, that really is one of the issues with trust deed investing, is the fact that there's a lot more money coming into the market now. I have a lot more investor clients than I had a year ago at this time. And yet the loan volume demand, at least in our company, is fairly steady. You know, we're doing anywhere from 15 to 20 loan fundings per month in the Bay Area to real estate investors who are either buying, fixing, and flipping, or buying rental property.
What's the average loan?
The average loan size is about $150,000 to $200,000, paying the investor a rate between 8 and 10% on average fixed for that period. So of course that's a great rate, and we have a lot of investors who are very bullish about investing in those real estate secured notes. And when they get paid off, it's like, okay, well, how do I get into another one? And that is oftentimes a challenge for some people, because we don't, depending on the volume, you know, we may not have a loan, you know, ready for you yet. But that's.
But the key is on like this kind of question is the fact that you don't hold the money.
No, we don't. Right.
Once the borrower gets paid off, your private investor lender gets the money back.
Okay.
He can do anything he wants with the money.
Which is actually a safe thing for an investor.
Exactly.
Right.
You're not having to pay out on interest that you're not actually earning from a borrower.
Well, so to expand this even more, there are two ways to invest in real estate secured notes. One is to invest in an individual note, where you know who the borrower is, you know where the property is, and you invest your money by wiring it to the escrow company once the loan documents have been signed. It's your name on the note. The borrower owes the money to you, and your name is on the deed of trust that gets recorded. You're named as an additional insured on the policy. So you have complete control over that note. You have all the rights and remedies that Bank of America would have if they had made that note. So that is the best way, in my opinion, and it's also the most common way today of investing in real estate secured notes is to invest in an individual note. On the flip side, the other way to invest is to invest in a mortgage pool or a mortgage fund, and that is basically a limited liability company that has multiple investors where the money is pooled together, and the asset manager, who's generally a private money lender like myself, a broker, then has the power and authority to make loans with that pool of money. The difference to the investor is if you invest in an individual note, you can basically say yes or no and pick and choose the property you're loaning against, whereas if you invest in a fund, you have no choice at all. You're dependent on the integrity
of the manager
to make prudent investments with that capital. And when you put your money in a fund, you don't get it back until you ask for it back. And when you ask for it back, if the fund's not liquid because all the money's lent out, you may have to wait a while. And so
also you don't get to pick and choose
which. And there's nothing wrong with a mortgage fund. It's just they've fallen out of favor in the last several years because funds were very popular in 2005 and 6 when the market turned, and there are many non-performing funds in and around the Bay Area right now. In fact, worse than that, there are some extremely large funds that went into bankruptcy, and the investors in those funds are seeing pennies on the dollar return. So in terms of our business model, Pacific Private Money, we do not have a fund presently. I look forward to the day in the future when funds come back into popularity, because I think that there are good reasons to invest in a fund. One is, of course, diversification, but at least right now, I think a number of people have either they have their investments stuck in non-performing funds, or they've been burned by funds that have gone south, and so.
Mark, I've a lot of times RPM has 400 agents even in California, and a lot of times I get an email, and does anybody know a hard money lender? Would that be what you are? Is that another word for what you're doing?
Absolutely, yeah. Hard money lending and private lending are synonymous. the term private lending is kind of a newish term that we've used that's come out the last several years. And when I chose the name for our company, Pacific Private Money, I chose to go with private money as opposed to hard money, generally based on my my position that it is a different business model in post real estate crash, 2010, 2011, 2012. It's a different business than it was 10, 15, 20 years ago. Hard money used to be you were basically making a loan to someone who really couldn't afford it. It was you were lending to a distressed borrower. Well, today we generally aren't making loans to distressed borrowers, but we're making loans on what would we be called distressed real estate.
Yeah.
Bank-owned property is considered distressed real estate. Short sales are considered distressed real estate.
But it's already distressed by the time you make the loan on it.
Right, but there's nothing wrong with the real estate. It's just, there's an opportunity there for a real estate
not
investor to
falling
make a
down.
play. Right, exactly. And so oftentimes our borrowers are actually very, very bankable, or would be bankable if the banks were making loans to real estate investors, but they're not.
So if you had somebody that was a potential borrower rather than an investor, what would they, to try to figure out that they might be able to qualify, or how do you qualify a potential borrower?
Well, we qualify really first the asset. When someone calls us, it's several things. Number one, you should know in advance that we don't lend more than 65% of the purchase price. So if you're looking to buy bank-owned property to fix and flip, you're generally not going to find a lender willing to go higher than 65%.
You're
So
not the FHA doing
Right, we're not,
96.5%
right, we're not
loans.
doing high percentage financing. In fact, we never really were. The private lenders and hard money lenders were not the cause of the real estate meltdown or the subprime crash, but we've kind of gotten corralled in with the rest of the lenders and with all the new regulation. But so someone would call it 65%. Interest rates, depending on where they're buying, are going to be anywhere from generally 10 to 12% to them, and then my investors who fund those loans generally get 1% less than the note rate. There's a servicing component that goes to our company for servicing the loans. So, FICO scores are not a requirement. I look more at the experience. If you're an experienced real estate investor, but you've got some foreclosures which have affected your FICO score, that is not an issue for us generally. In fact, I like experienced real estate investors, and again, we're very fast at putting together a price. Usually, if you call us up on the phone, we can just give you a verbal range within minutes of whether we think this is a deal we can fund.
Okay, really quickly before we cut to break, give out your information for people who need to invest.
Our website's pacificprivatemoney.com. Go figure, hey?
Yeah.
Phone number is 415 area code 883-2150. That's 415-883-2150, or visit us at pacificprivatemoney.com.
Okay, when we come back from break, you'll ask Robert his question. And
Yes.
We'll talk just a little bit about the stock market. All right, here we're cutting to the third and final trivia question. What language drives Gomez crazy when Morticia speaks it? Again, this is the Addams Family. That's our theme for today. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What language drives Gomez crazy when Morticia speaks it? Call 888-912-1190. Make sure to include your name, address, email address, and phone number. Speak slowly and spell it out for us. And, we got to start doing this pretty soon, too. Okay, and we will be right back. Da-da-da-da. Da-da-da. Yeah, very good.
That was good. Oh, thanks for asking those questions.
Yeah,
Those
yeah,
are good
yeah,
leading
people
questions.
weren't very good.
Yeah, that's perfect, man. You're
Yeah.
a team player.
That's a
Dude,
hit. We
you
like that.
might have to work on a semi-permanent slot for you here. Even Southern California, 12 and 13%, and 4 to 5 points is not unusual. But the Bay Area with Silicon Valley and all the wealth and all the money, and we actually don't have that many. It's not as big an industry, the private lending industry, as it is in Southern California in terms of numbers. But it's just interesting how we have. You actually can't get private money in the 8% range and the 9% range. We do those loans
Yes.
quite often. So
When clients come to me and they're looking to borrow, and I tell them, I said, well, here's an example. the kids inherit the house from the parents, it's worth $500,000.
Right.
They want $100,000. The house is free and clear.
Yep.
They all are great. They all make a bunch of money, and they are not going to pay less than 8 or 9%, less than 3 or 5 points. Do you think your situation is better than that?
Yeah.
So it just doesn't, it just, and
Yeah.
it's a function of how much money is sitting idle, and if
Yeah.
somebody says, well, I'll do it at 6%, which I don't
At the end of the day, I just want to do loans.
How do you keep tabs of what the other private money lenders are doing so you know you're in the market?
I get all their email blasts.
Yeah.
They're telling me, and some of those guys are advertising, 2 points and 7.99. There's a, Sequoia here in Santa Fe advertises that. Now that's their super prime. It's got.
I wonder if anybody's ever got
Right,
that.
I don't think so. Knowing Jason, I don't know that anybody's
Yeah,
ever
I
actually
wonder if
got
that's
Plus-
if
plus
the Attorney
50
General would like to
Plus
hear it.
$5,500 in fees.
Yeah, well, that's just it. Yeah, the junk fees are probably higher than mine, but anyway, it's under Section 32 or 35, and it's a primary residence. You have to verify ability to repay,
Yeah.
which
Not
is a
without the
gray
sale
area,
of-
right?
without the sale of the
It
property.
is just
Nobody does a private residence. They're doing it as a business to rent out. Then afterwards they
course.
decided to move in.
That's right.
well, that's okay because see, when in my set of loan documents, if you say this is not intended to be my primary residence, therefore.
Third trivia question, and then
Yeah, I want to get into
wanna
like
get
just
into your
talking
favorite,
about,
yeah.
let's talk about where you see rates and the housing market
Yeah.
going. I can share a little bit about, I went to Bay Area Wealth Builders last night and saw Robert Campbell, who's, an economist who makes his annual predictions 7 years in a row now at the local Bay Area Wealth Builders meeting about where.
I'm just going to make a quick comment about the
Where the
stock
economy's
market and then go
Yeah,
into
sure.
it.
Yeah,
Sure.
it'd be
Okay.
interesting to hear.
Excuse me. Okay, you guys ready?
Yep.
Okay. And away we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host Mark Hoff of Pacific Private Money. When we cut to the last commercial break, we asked this trivia question. And again, the theme was the Addams Family. What language drives Gomez crazy when Morticia speaks it? Anyone?
Morticia, you spoke French.
Ah, that's right. Oh, Tish, you drive me crazy when you speak French. That's right. Very good. Okay. Quick note here about the stock market. It's been going up a bit, but without the volume. So we're wondering if the average retail investor has stayed away because of confidence lacking in the economy, which kind of leads into what you were going to ask.
Well, lack of confidence, I think, is one of the primary causes, I think, of both stock market melees and real estate market melees. I mean, those of us in the business know that the fourth quarter of 2011 was very disappointing for the real estate market. There wasn't the unit sales that people were hoping for and or expecting, and we saw prices continue to drop. And a lot of us think it has to do with, a couple of things. One, consumer confidence being at an all-time low, and number two, the fact that the media continued to play up reports of predictions of continued declines in real estate prices. So that's the problem with deflation. If you think something's going to be cheaper in 6 months, you're not going to buy it today unless you have to. And for a lot of people who are out there renting and shopping for homes, if you don't have to buy because maybe I can get that same house for, who knows, $20,000 less, and in the spring, I'm going to wait. So
we'll get you went to a very interesting seminar.
I did. I went to the Bay Area Wealth Builders meeting Thursday night, and Robert Campbell, who is a San Diego economist, came and spoke. He spoke 7 years in a row at the Wealth Builders meeting, and he comes and for about the last 20 years he's been studying real estate trends, and so a lot of people follow his newsletter and his predictions for the coming year, and it was very, very interesting to hear him. And of course, it's still January, so this is the month for predictions. What's going to happen in the economy and in the marketplace and in real estate in 2012? So he had an interesting take on interest rates. But before I share with what he said. Robert, I'm a little bit curious what's your crystal ball say in terms of where rates are heading this year and where the real estate market might be heading this year?
Well, I'm not sure what the eminent Robert Campbell said, but I'll stick my neck out from my limited experience, and I agree with you that it's hard for someone to get enthused about investing in either a house or a stock market when predictions are basically that we're not coming out of it, and although it may be a good time to buy, it may be a better time in the future, it doesn't make people that enthused about putting their money into the market. That's why individually and corporate there's so much money on the side, both in the market, stock market and the real estate market. From what I see, and I believe that we're not even at the point that we're on our way up out of this. When we started this, George Soros, who is a billionaire, he said there's a 6-month cure to this situation or a 10-year cure. And the 6-month cure, at least in the real estate, was to do a program that maybe eventually we do and force all the banks or ask all the banks to give the people an interest rate that lets them stay in the market and bifurcate their loans so that if they were upside down, the bank would cut the loan in half and just have them pay on 90% of the current value. The residual would go in a toxic box. It wouldn't accrue interest. They wouldn't have to pay. And if they ever sold the property, they would split the proceeds with the bank. And if the
like
banks,
a JV partner.
Even if the banks did that today, they would end up losing less money. We could turn this around quickly, but that, for whatever reasons, doesn't seem to be what's happening. So,
Well, it sounds a little bit I can imagine from a bank standpoint, trying to do these loan docs with, getting a percentage of the profits, and they don't want to be JV partners with anyone. I think it's a neat
And they're
plan.
not good businessmen to begin with, so the
yes, I
paperwork
think that's
around
more,
that, I think, would
that's
be
more to the
ridiculous.
point. If they could be shown that it would be to their benefit and their stockholders would see that it would be the benefit, maybe there would be an impetus
Oh,
to do that. But
how
I
do
don't
they do
think-
the
I
accounting
don't
with
see-
accruing
I don't see that happening
the
either.
capital
So, be interested to hear what Robert Campbell said. But I see that we're going to be in this languishing market, at least in the real estate market. But I've had clients who bought a property, and their mortgage payments with taxes and insurance is about 75% of what they were paying in rent. And when you have that as a base, to me, that's a really firm financial setting where that probably is the place from which you build and go up.
Now, you don't think Congress is going to change the tax laws to get rid of the home interest deduction, do you?
I think that there will be a huge fight if they start pushing towards
Yeah,
that.
but look at all the money they could raise on
Yeah.
taxes, But of course, they'll put us in a deeper depression than we're already in.
Yes.
Well, let me go ahead and share with you what the thoughts of the seminar I went to, and essentially he had lots and lots of slides, which can be really boring. But the net of it is that here's a guy that's been watching real estate trends for 20 years, and number one, he said in his opinion that the play in real estate, if you're a real estate investor today, is in fix and flip, as opposed to buy and hold, which I found very interesting because we've talked in other shows where we really like the buy and hold strategy if you're buying for rental income,
Yeah.
not necessarily for appreciation. And I think he wasn't specific about this, but I would bet that if I questioned him about why not buy and hold, it would have to do with the fact that he doesn't believe there's going to be significant appreciation in the
Yeah,
near
exactly.
future. And so if you're looking at how do I make money now in real estate, it's the play is fix and
Yeah,
flip.
but as you said before, fix and flip, you got to have a very sharp pencil.
Well, you do. You absolutely do. And there are people getting hurt in this market, fixing and flipping, who don't have a good knowledge of the area, don't have a good team together, don't have control of their costs, and don't do due diligence before they buy the property. So you really need to know what you're doing. This is not a beginner's market here. This market is unforgiving if you make mistakes. So that was interesting. The other thing he said that I thought was interesting is, if you had asked me if I thought interest rates could go any lower, I would tell you probably not. He thought that he's predicting that rates could actually go lower.
It would be negative?
Well, no.
If they're negative, they're going to pay me to stay
Well,
in my house. I like
the
that.
banks are borrowing money at virtually 0%.
Yeah.
So their spread in what they borrow and what they make is higher than it's been traditionally. So there really is room. I don't know if he mentioned this, but that's one of the reasons that there is room for interest rates to go even lower than they are now.
Right, and even if they don't, Robert, it's. I think the good news is that there's this fear that rates might go up, spike up imminently, that we've got because of all the money from TARP to QE1 and QE2, that there's going to be these inflationary pressures, and we're going to see runaway inflation and interest rates skyrocketing. He didn't seem to think that that was based on, again, watching the trends in various economic statistics. He didn't think that there was any underlying cause for that to become a reality anytime in the near future. So I think the good news of that is that we may see at least stability of low interest rates going into the for the next several years, which I think will help the market to recover. Because I think we'd all agree that if the market begins to recover and we start to see home buying activity pick up like we're all looking forward to, and if interest rates go up, that's just going to put the brakes right on them all over.
Oh yeah, I mean, you still have people.
Instantly.
Well, Robert, thank you. We're going to definitely have to have you on the show again. You're expert in the mortgage business.
Well, that would be great. I really enjoyed my time here, being with you guys and talking and listening.
Good. Well, thank you very much. That's because he's a very interesting guy. All right, here's our thoughts for the day. Why are the numbers on a calculator and a phone reversed? You ever wondered about that?
I guess they are, aren't
Yeah.
they?
Didn't you say something?
Yeah,
like-
I always heard that it was because when the touch-tone phones first came out and people were so fast on 10 keys that they were pushing the tone buttons on the phone too fast, the phone it would, I guess, clog up the phone company's computers. They couldn't register it quick enough.
I don't know about that. What about the rotary dial? Okay. And when I went for my driver's license, the guy at the DMV told me to smile. Why? If I'm stopped by a cop, I sure ain't gonna be smiling. That photo ain't gonna be looking anything like me. All right, tune in next week to the Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. And our scheduled guest next week is going to be an expert in solar. We'll discuss the ins and outs of solar and talk about the most cost-effective way to buy it. You're not going to want to miss this show. I've got solar on my house, and I've figured out all the angles and got it the most cost-effective way. It's going to be a very interesting show. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. And that's a wrap.